We have Khalid Hashim, who's the CEO and Managing Director of Thailand's Precious Shipping and one of the largest dry bulk carrier operators here in the Asia Pac. And he joins us from our Bangkok studios today. Khalid, thank you so much for joining us on this Friday. Hopefully you heard Leslie Tan and his report on the, I guess, the conditions right now in the shipping industry. It looks like supply is going to outstrip demand in just a few years, if not this year. So is that why you remain cautious at this point?
Most certainly so, especially for the dry bulk space, where we can see that demand is going to roughly equal what it used to be in 2008, which in demand terms is a significant growth over 2009. But in the meantime, supply has grown by approximately 10% per annum over the last 3 years. That is 8, 9, and even in 10, it will grow by about that much. So overall, there'll be a massive growth in supply, yet demand would roughly be where it was at 2008.
Okay, and what about the staggering drop in earnings per share for the shipping companies? As Leslie pointed out, shipping companies and shipping stocks have done pretty well in this recovery, but earnings per share, some numbers in triple digits in terms of declines. Is that a point of concern for you, and will that happen for Precious Shipping as well?
As far as the declines are concerned, I think I didn't get the feed from Leslie, so I can't really comment. But I can say this, that the declines have mainly been in the container space. As far as the dry bulk space is concerned, yes, there have been declines. Different companies have been hurt differently. For example, Precious Shipping, we've outperformed the market if we were to compare with our peers.
Okay. And what about the Baltic Dry Index? And let's take a look at the Baltic side, or the bulk side, if you will, because a lot of people are saying this is a point of volatility, the BDI. Why? Because some say maybe it'll hit below 2,000 by the end of this year. What do you think? Where do you think it's headed?
I would agree with that school of thought. I think the BDI is set to fall this year and will remain very challenged even during 2011. And the reason for that is very simple. Supply is simply outstripping demand.
Okay, can you give me a target then for the BDIY by the end of this year? You want to make an estimate here?
Well, I can give you a range. I expect that the BDI will be somewhere between 1,000 and 2,000 points, and I think that's how it's going to remain all the way through to 2011. I would even hazard a thought that it could break 1,000 and go down below that, but then it would be for very short periods of time.
Wow, breaking 1,000, that's more than 50% or half of the levels it's at right now. So that's a very interesting prediction, Khalid. Let me just ask you, when you talk about supply outstripping demand, people point to China, which seems to be the bulk of a lot of growth economically in terms of trade as well. When you see those CPI figures and those PPI figures yesterday, and people are talking about overcapacity in the economy, do you really think that demand is going to dry up for the global shipping industry, or do you think China will remain intact? That story will be there for support?
I think China is going to continue to support the dry bulk market, and that has never been in doubt. The only thing is that can China's demand exceed the supply that is coming on? And that, I think, is the real problem. It's not that demand is not growing. Demand is growing and growing very well, but supply is simply outstripping demand.
Okay, if that's the case, should we be seeing some more bankruptcies then for bulk shippers in the coming years?
I think 2009 could be characterized by the year of the unexpected, with expected bankruptcies not taking place. I think 2010 and 11 could be characterized by years of calling them the years of the expected, and I suspect that a lot more bankruptcies and a lot more foreclosures will take place during these 2 years.
Okay, and that's why Precious Shipping, I guess, is keeping more cash on hand then to protect the shipping company itself, because you probably have the second lowest gearing among the 5 biggest shippers that we track, these bulk shippers. What sort of opportunities does that present for Precious Shipping? Does that mean acquisitions coming down the pipeline?
Well, if you look at us, we've sort of timed this market to perfection. We've been able to sell off all our oldest ships, about 25 of them since the start of last year, and we're ready to replace them now. And obviously, replacing them when the market is at its lowest point, especially in a capital-intensive, highly leveraged business, is the right way to go.
Okay, but you have $175 million in cash on hand. What are you going to do with this cash? You going to give it back to shareholders?
Well, we have been liberally giving cash back to the shareholders. We have one of the highest dividend payout ratios. We also will be reserving this cash after having paid out very handsome dividends to our shareholders to help grow the business. Because remember, I have to replace about 25 ships that I've sold off. And that could cost me somewhere in the region of about $500 million, of which I have the leverage levels available to me. I have signed credit facilities for that, but I also would like to keep some of my cash as an opportunistic reserve.
And Khalid, quickly, when do you think you're going to make those orders for those new ships?
I suspect that the market, if it performs the way I think it's going to go to, then it would be more towards the second half of this year and early next year when we would be buying the bulk of these ships.
And how many ships are you going to buy, Khalid?
We've already bought 2 as replacements, and I have another 23 still to go.
Okay, Khalid. Thank you for your time. Khalid Hashim, Precious Shipping's Managing Director, joining us from Bangkok.